So first, I'd like to invite Christian Kejaneri, from the Director of Payments from the National Bank of Rwanda. Stay on the clean side over here. All right, and Leonard Mwanza, the CEO of the Bankers Association of Zambia. Sabine Mensah, where is Sabine? The Deputy CEO of Africa Nunda. And our board chair, Costa Perich, from the Bill and Melinda Gates Foundation. All right, thank you very much. And does everyone have a microphone set up? Okay. All right, and we all have very different perspectives coming from different parts of this ecosystem. And so no right, no wrong answers, just a chance for us to understand how different parts of this ecosystem are looking at this problem. So the first question that I really want to focus on is, what are some of the key differences, in your own words, between IIPS and IPS? And Sabine, if you don't mind, I'd like to start with you as a longtime worker on inclusive payment systems, or inclusive payments in general.
Hello? Okay. Hello. All right, sure. Thank you very much, Steve, and thank you to the Modular Loop community for inviting me to be here. It's a pleasure. I think for us at Africa Nunda, when we're looking at instant payment systems, and particularly inclusive instant payment systems, we look at it from three lenses. One is from a supply side, second is from a regulatory side, and the third one is from a consumer side. So from a supply side, we're really looking at open systems with multilateral interoperability arrangement. We are looking at a systems that is open to all licensed service providers within a country, if it's a country system, or within a region, if it's a regional system. We're also looking at equal input opportunity into the decisions made by the scheme. So equal input opportunity, either all stakeholders are represented at a board level, or there is a mechanism to ask for this input from all stakeholders and then take it in within decisions that are being taken. So from a supply side, those are the key criteria that we're looking at. Now, from a regulatory side, we feel like the involvement of a central bank or financial regulator within the scheme governance is a key way to really balance the interests of the private sector versus the financial inclusion goals at the country level or at the regional level based on the country's national financial inclusion strategy. From a consumer side, we're really looking at making sure that the system enable access to an extended use cases, so beyond just person-to-person transfer and person-to-business, so enabling much more use cases, interaction between individuals, businesses, and government to facilitate those different use cases. So you have to do more than cash if you want people to really use digital. We also feel that the system has to enable low value and low cost to be attractive to consumer to make that transition towards digital. And from a consumer perspective, the system also has to provide safeguards from a consumer protection perspective. So recourse mechanisms that are transparent, that are communicated to consumers, and that there is actually an application of these mechanisms when the system fails the consumer from one perspective or the other. So, and then last but not least, that affordability question, it has to be affordable. So I think those are all the different facets, I can say, from the inclusivity perspective, from being really anchored into the consumer needs and ensuring that there's a level playing field with the different financial service providers that are in the ecosystem, and that at the end there's a governance that's really supported by a central bank or financial regulator. I think that's it in a nutshell.
Okay, that was quite a bit. And so anyone who hasn't actually read the SIPS report from Africa Nunda, please take a look. I said if anyone has not read the SIPS report, please go and check it out, because of course I have. And so please go and check it out. It is incredibly comprehensive. I would just say, for whoever wrote it, chapter 4 is amazing. That was where I really dug into it. So yes, I have read it. One of the great things that I think Sabine just mentioned is the equal access to decision-making and participation in the governance. And even though not here on the panel, I just want to point out for Vice from Higala, I mean, in a previous world, I mean, the Philippines is an amazing example of this. We heard Getuku talk about including SACOs. And one of the challenges in governance is a lot of the boards of hub operators are dominated by banks, if not exclusively banks, and trying to provide governance that includes SACOs and mobile money, it can be a challenge. And so the Philippines has a really interesting solution to that with PPMI, that if anyone is interested, please reach out to Vice and hear about that. Christian, I'd like to pass to you from the perspective of Rwanda. And Rwanda has a long and a clear path with, I think, what a lot of people talk about regularly, of the RNDPS blueprint of an inclusive instant payment system, but also a lot of other payment systems happening in Rwanda. And your background now, very recently, working with the regulator, but working with all the different parts of the private sector over your career in Rwanda, can you give us some insights into the journey Rwanda's been on and where it's headed to, in terms of instant or non-inclusive versus inclusive?
Thank you. Just to put a few disclaimer, I'm only 2 months in my job. So if I speak more as a private sector person, not your typical regulator, please be patient with me. I was also happy to see that Sabine was on the panel. We were together last year in Nairobi, talking about remittance challenges, IMT, DMTs. Thanks for the invite, Steve and Paula, and even African Enda, for everything. Quite excited to be here and talking about critical topics in Africa. Just before we start the session, I was asking Steve, please tell me what are the right and wrong answers so that I don't diverge fully into something that's different from your agenda. And this is what I had in mind. What we're doing in Rwanda as IPS, Instant Payment System, is what we call the Rwanda Integrated Payment Processing Systems, which started in 2011. And they were doing ATS and CSD, ATS Automated Transfer Systems, and Centralized Security Deposit System. And that was only 5 working days, 2 hours lagging, and only limited to bank-to-bank transfer, and maybe sometimes EFT and SWIFT. Then 10 years later, a long period, we started 24/7 from 2021. Up to now, we are doing 24/7, what we call RIPS, the Rwanda Integrated Payment Processing System. And that's largely more automatic clearinghouse, ACH, RTGS, and so on, which is more limited to debit card, instrument like checks, prepaid, ATM. What we're trying to do, which again is a long journey with RNDPS, the Rwanda National Payment System or Strategy, we are trying to be more inclusive, and that's where again the concept of IIPS comes in. Why? So I come from mobile money, and I was in charge of product and payment services. You realize there's a lack of communication between the two systems. This has been grown more largely into banking system, which is wide in Rwanda, 11 commercial banks, 23 microfinances, and only 2 mobile money operators, one that is doing more than 90%, similar to the M-Pesa of Kenya. And so it's a shame that the current integration is more bilateral. So mobile money has 11 pre-funding wallet, and serious headache of reconciliation, settlement, claims. It's a headache, and I'm talking from experience. Hence why making it inclusive and bringing in the concept my fellow guy was talking about from PesaLink, having a digital public infrastructure, something that I'm really advocating that I came across recently, is paramount. It's really something that we need. Why payment is becoming a utility, it's unavoidable, and making it open source, blockchain native, DAV agnostic, and so on. So many possibilities. So we are on that journey. There's a lot of use cases that we need to deploy, but I believe it's paramount that we go that way. Thank you.
Thank you, Christian. And I think you brought up a great point too. Even if we have a market leader in mobile money, it's still not everything. The SACOs and everyone else, and even for a strong market leader, and your experience working in the private sector of the challenges of reconciliation, the challenges of integration, the challenges of even being the leader in this payment system is difficult. Multiply that for the SACOs who are desperately trying to participate is quite difficult.
412 SACOs, I forgot to mention that. So it's a headache and it's a pain. And it's costly, like Sabine said. Thank you. And
like Gituku had just mentioned, if we want to, wherever somebody stores value, they should be able to transact with that money. And I think it's very exciting to be in a room where everyone seems to agree with that. We no longer have to convince people of that. But now we have to figure out, okay, what are the challenges to do that? So very excited to see Rwanda move on that journey. Mr. Mwanza, if I can ask for you from the Zambian perspective, one of the things in my recent trip to Zambia, our colleague Phil showed me what it's like to send money using the NFS from a wallet to another wallet, and it was a great experience. You actually had the verification of the sender. You enter in a phone number, any phone number from any service provider, and it gives you back the name of the person you're sending to. That's amazing. And so we haven't seen that in a lot of countries. So I do think the NFS has been is one of the exciting things that we're seeing, and we're very excited to see where it goes. But I'd like to hear your perspective of, in Zambia, what has been the journey of instant payments and inclusive instant payments, and where might you go?
So thank you so much for the invite. Before I go into the NFS and what we've achieved so far, let me just share that Zambia was the first country to deploy some instant payment system. It was called Selpay way back in 2001. That was way back before M-Pesa became the household name. So we pioneered, forgot about it, and we came back to Kenya to learn what I'm told they came to learn in Zambia. So the journey around the instant payment system, I think in our country was not devoid of challenges. We were coming from individual players protecting their own turf, so a lot of closed-looped bilateral solutions were on the market. So to try and break those, it was not an easy thing. So the banking sector, together with the central bank, co-own the clearinghouse, the Zambia Electronic Clearinghouse, ZECO. So there were other use cases that were already on that channel. So informed by the National Financial Inclusion Strategy, which was drawn up by the government of the Republic of Zambia, we started a long discussion around, can we have a switch that is interoperable and where a number of use cases will be deployed. It wasn't an easy discussion because obviously it involved cost, it involves disrupting what those banks were already accustomed to. I mean, they were protecting their commercial side of things. So it was a tug of war somehow, but then we started the journey, I think 5-6 years before we deployed in 2018. So to fast track the process, so in 2018, we did deploy the National Financial Switch, though we didn't start with all the use cases. We started with the ATM point of sale interchange, and then we brought in the MNOs, we brought in the fintechs, and to your point, we kept improving in terms of how the instant payment were flowing within our market. So we had to cut those silos, the bilaterals, and as I said, it wasn't a walk in the park. Institutions needed they had to defend themselves. They were worried about system integrity, fraud, and system outages on the NFS. So they pointed out all manners of concerns. Some of them, indeed, they came out as a reality when it comes to fraud, sometimes systems outages and all those things. But then once we deployed the mobile money, which we call the e-money option on the NFS, I think things totally changed because the first deployment, as I said, was in 2018. But with the advent of COVID, there was some kind of fast tracking of the process of deploying all the use cases. So we moved, I think, the market onto the instant real payment systems, digital channels. And because of the pandemic issue, it was almost automatic switch where everyone now moved into promote the movement of funds on these digital channels. What we saw was a complete turnaround. The conversation moved from protecting commercial interests to delivering customer value and ensuring that services were running even without the physical presence. So that turned around in terms of how we've been seeing these real-time and instant payment systems. So what happened that from 2017, the numbers we were seeing were very low. Fast track to 2023, the e-money channel or the mobile money channel use cases have now overtaken all the other payment channels on the Ezekiel. So before, the EFTs were leading in terms of numbers, but now what we have is that the e-money channel is actually moving the most transactions. In the first years, the growth was over 100%. Last year, 2022 to 2023, our growth was not as good as Kenya, but near, it was around 52%. So we are seeing a lot more transactions that are moving. Now, what are we seeing? Is the convenience to a client, to a customer, to move money anytime they feel like moving it. Even whilst I'm here, I'm able to transact and move money to wherever it needs to be. I think that has been quite an exceptional growth. So we've tucked away the concern that were being raised in the beginning. We are now moving together. I think we are focusing on addressing customer experiences. How do we address issues of frauds? How do we address issues of system downtimes? How do we address issues of reconciliations? So that is where the mistrust sometimes is in the background, where sometimes we point fingers, whether is it on the commercial banking side, is it on the MNO side, or is it on the fintech side? But quite exciting times in the sense that we've never seen this phenomenal growth where I would say an upstart channel has come in and overtaken all the other channels, and we are all closely moving towards that. So what we're asking now is that perhaps if we could have a more coordinated approach around infrastructure development. I think there was digital public infrastructure talked about. There are issues in terms of the lag effect in terms of deploying infrastructure like internet connectivity in remote areas, infrastructure like bringing government e-payments onto the platforms. We are still a bit slow. So, and then the adoption from the retail side of things, I think we are still slow because we still have to find a place where you can cash out. That's why the challenge is. We want to see a situation where I can go onto the street, I can go to any retailer and be able to use my mobile wallet and transact. We haven't yet caught up to the level we wish to see the way Kenya has reached, but I think we do have some thinking in the background. I think ZEC is enhancing the national financial switch, deploying the national QR code, its project to work. Then we are also looking at how we can improve the national financial switch around creating shared agents models, I think like we've seen in Kenya, we've seen in Uganda. So those are some of the initiatives that we are seeing. But I think by and large, it's one good case example where starting from rigidity and then moving to enjoying all the benefits. I mean, we had a very long discussion around the commercial side of things. You can't come here and start disrupting our revenue. But the long story has been that the volumes have gone beyond our initial expectation, and the fees that were agreed upon seem to be sufficient. I think there's equal revenue share depending on the volumes that a particular participant is moving on the NFS.
Thank you very much. I think there's a few points I'd love to point on that. One, you mentioned how it ties into DPI, and just to note that Smart Zambia is actually has a couple of very amazing initiatives on DPI that I think if anyone's interested, Robert Karanja and can talk about. I'd love to see more collaboration between Smart Zambia and RISA on DPI, and we're happy to work with both those organizations on sharing. There are a few other points I'd like to bring, but I'll go back to them later on. So Costa, you've been around since Level 1 really grew, and I think Level 1 is, again, if anyone hasn't read the Level 1 program document, it's incredibly relevant even many, many years later. As we've talked about, as the world of instant payments has grown, some of that applies to all instant payment systems, and some of it applies specifically to inclusive instant payment systems. Could you help us with understanding the nuances within the Level 1 principles?
Thank you. And indeed, let us focus a little bit on the word inclusive, which is key. As you all know from the Bill and Melinda Gates Foundation, the mission is really financial inclusion. And today, in Africa, there is still an estimated of 300 million people that are excluded. But there are many more that are included, but maybe underserved as well. So we are all here on a collective mission to include and serve these populations, which tend to be poor and or rural. So what principles are there that make a payment system inclusive? The first, I think, has to do with instant. The word instant, in the way, because if I send Sabine money, she has it immediately, instantly, and she can use that money right away for her own transaction. That means that the transaction is instant, within a few seconds. It means that it's irrevocable, because if Sabine can't trust me that I gave the money, then she will not trust the system. And that makes the whole transaction be a little bit like cash, but in a digital format, with the advantage of being more secure, and the advantage that Sabine and I don't have to be physically present, that I can hand her the cash. So that's kind of one set of principles on why a payment system should be inclusive. The other is the word instant. So few seconds. So we are not talking about fast payment system. We're not talking about faster payment system. We're talking about instant. Consider the use case of merchant. If you are in a market paying for something digitally, it's got to be instant, a few seconds. It cannot be 20 seconds. It cannot be 1 minute, because obviously the queue is building up behind you, and so on and so forth. So that's the other part of the word instant. So it's, as opposed to fast or faster payment systems, that's another principle. Another view of the word inclusive is, what does it take to actually include people who are unbanked, who don't have necessarily a formal address, who don't have necessarily a birth certificate, who may not know their date of birth, and so on. That means that there's got to be some mechanism as we know, technically called KYC, some KYC mechanism that enables these people to come in. And there are ways to do that. There is digital identity system, but there are also so-called tiered KYC systems that are available. And then the last point I want to mention is and here I want to recognize, as we have just heard, East Africa. Back in 2013, when I joined the Gates Foundation after a long career at SWIFT, 2013, East Africa, I think, was the cradle of this innovation of instant payment with mobile money. Today, this is not anymore an innovation. We are now all busy setting up instant payment systems. What has happened in addition is this notion of interoperability. Because if you look at it again from a woman that has a mobile money wallet, she needs to be receiving a salary maybe from her employer who has a bank account. She needs to be receiving social aid from her government, from some bank account of her government. She needs to be receiving money from her son who works in the city, from another mobile wallet. So this notion of interoperability of bank and non-bank is really fundamental as well to this. So the level 1 project principles, which if you haven't read them, it's only a few, there are 10. These principles, I think, describe why a payment system is inclusive as opposed to faster payment systems. Thank you.
Thank you, Costa. And I think you actually tied in a few things. There's 2 following questions that we were going to go through, and you started your answers. So unfortunately, you're going to get skipped because you gave your answers for the next 2. And the 2 are that I want to give to the rest of the panel, and you can't just copy Costa's answers. Who are the segments of society that we feel we have to really focus on to make sure that they are included? Who are we not reaching? You talked about 30 million people. Sorry, 300 million people. Who are those 300 million people, and what does their situation look like, and what are the use cases that we should focus on to make sure that we reach them? And you gave a couple of excellent examples, so I want to hear from everyone else as well. And one of the things that I do want to preface is to say we're all very excited about merchant payments. Merchant payments definitely have shown us with UPI and PIX that drives scale. But that's not necessarily what's going to drive inclusion. So let's not limit ourselves to merchant payments just because we're excited about the scale that comes from it. What are the use cases that we need to focus on to make sure that those 300 million people are brought into and helped by these payment systems? So since you're looking at me and nodding, I know Sabine has lots of views on this. We'll move over to Sabine with those questions. Who are they, and what are the use cases we need to reach them?
60% of these 300 million are women. Women. 60%. They are also the ones that are less, have less identification, because we talked about ID, than men, typically, particularly in sub-Saharan Africa. They have less access to a mobile phone. They use mobile internet less than men. And a lot of women are also in rural areas, which by nature are less served by the financial services than in the high capital cities. So it's incredible that in a world that is half of the world is women, that we still have so much discrepancy in terms of financial inclusion and digital inclusion for women. So for me, when you're looking at use cases, especially when you take the context of Africa and you look at rural areas or vulnerable population, a lot of government social benefit programs are targeted to women or vulnerable population or rural population. So if we were to digitize government to people social payments really in all countries via digital systems, this will definitely increase financial inclusion, because for a lot of women and a lot of a vulnerable population, it would be the first interaction with a financial system because they're receiving this social payment. And if this is done on a wallet, on any digital form, we have the opportunity to start mapping their history of transaction, whatever they do with that money, whether it's sending to somebody, it is paying or whatnot. And that alone will bring even more data into the ecosystem that would enable a lot of fintechs, a lot of startups to build specific products and services that could potentially help them have access to more resources, credit or savings, or securing their savings better, having interest on it. So those are all, for me, the gateway to financial inclusion is payments, but how do we bring that payments near to the consumers that are most vulnerable and most excluded from the ecosystem? Government payments can be one of the biggest use cases to enable this type of transformation.
Thank you. So government payments, that's one that we're very focused on. Mr. Mwanza, same question. As a longtime banker in Zambia, who do you feel in Zambia is the portion of population you really need to focus on next to make sure that NFS is inclusive? And what are there's a large pipeline of use cases next to come with NFS. What are the ones you think are going to drive inclusion in Zambia?
So as a country, in terms of financial inclusion, we're at 69.4%. So they excluded at the national level, they're around 30%. But then when you get into the details, exclusion is more in the rural areas, more with the women, more with the youths, and also for those in businesses, it's the informal sector. A good number of Zambian-owned businesses are actually in the informal sector. And when they're asked, why don't you have a bank account, they'll tell you maybe it's distance, maybe they don't have enough resources. Infrastructure is also key. I'll give you an example. There is an area where there are civil servants, maybe they're teachers, they are nurses manning a rural health outpost, where it's typically when they receive a notification that they've gotten their salaries, they literally have to take a journey of 2 days or thereabout to go to the nearest business place where you find shops, where you find agents. So the lack of economic activity in certain areas also is an exclusion aspect of things, because if I'm part of the ecosystem, yes, and I'm able to receive money, but I can't redeem it near where I live, it becomes a problem. So some of the initiatives that are being fronted to perhaps take note of government centers like schools, health posts, including centers of worship where there are always a congregation of people. Can those be used as business centers where probably issues of cash in or cash out can be transacted to bridge the gap around the distances? And then the deployment of infrastructure, yes, a lot has been done, but usually it's along the line of rail or the main trunk roads. You find that if you go 30 kilometers away from the main trunk road, you really struggle to get even your voice connectivity. Waits for data, it becomes a problem. So if we can improve infrastructure on the other hand, but also ensure that we create some business concepts that are localized so that you're able to reach out to the people that are in the informal sector and they are always going to do business, but then they'll tell you maybe it's expensive, sometimes they feel it's not for me, and that kind of thing. On the positive side, I think what we've noticed is that the gender gap generally in the country is not that big. You have maybe the men around 62% inclusion, then the women maybe around 58% thereabout. Now, on the women's side, I think there are some positive stories that we need to share. There are more savings groups among the women, what they call them circles. I think we call them village banking groups. So you find that a good number of women who are in both urban and rural areas are in one way or the other part of a savings group. So previously it would be physical cash being saved in a little tin somewhere, and then eventually they share out and lend to each other. So the onset of digital mobile money has changed the profile of how they save. So they're now able to put money together and save using their mobile phones and lend to each other using mobile phones. And increasingly, we've seen that even the bigger players like commercial banks, they are also innovative and creating products that enable these savings groups to link their mobile savings wallets to the bank savings wallet. So, I mean, even though the governance structures are being put in terms of who signs and who makes the key decisions. So that's quite an improvement. So I think infrastructure will be key, and also to make sure that we bring some of the services closer to the people. I think, as I said earlier, the other aspect is the low adaptation of mobile banking by the retailers. It's taking shape, but a little bit slower. We need to enable them to fully adopt and accept mobile money as a form of payment. Once we reach that stage, perhaps then that aspect of that teacher moving 2 days to go and redeem their salary at a cash point may be reduced, because maybe a local business person, if they're empowered, then they can become where they can do the exchange and probably redeem their salary by exchanging their grocery needs or something like that.
Amazing. I think there's a couple points that tied in. One is that GDP in salaries as a driving use case is not enough. The fact that people can, once they get it, is a big part of GDP payments. And so thank you for bringing that one up as well. And you mentioned KYC. It's not just KYC of individuals. It's the ability of a business to take advantage of this, even if they aren't a regulated business. So Christian, with that, I think I'm going to have to give you the last word because right here on our screen in Rwanda, who are the ones who are excluded, and what use cases you think are going to drive the inclusion of them in Rwanda?
Thank you, Steve. When you asked the question, I knew Sabine would say women, and it's true. Why? For a few reasons. In my previous job, Mobile Money Rwanda, I was in charge of strategy and products and services. The less defaulters on a product called Mokash, which is similar to Mshwari in Kenya, are women, right? Another statistic is that more than 66% of our agents then are female. 52% of population of Rwanda are women, slightly higher than men. I think 7.1 versus 6.9. So I want to add on what she said, youth. Youth, why? In Rwanda, more than 78% of the population below 30 years old are youth. And sadly, or ironically, they're the one left behind in terms of financial inclusion. What do we need to do? One is fragmentation of merchant segment. The pricing is one size fits all, a flat fee. Yet in Africa, we have a so much fragmented economy in terms of informal. Fragmenting it into nano, micro, large, small, large companies. So that's the biggest challenge that we have, especially on the side of mobile money operators. It's a common issue that I've seen across. We have created solution of self-onboarding merchant, but it's not fragmented and not categorized in terms of sector, agriculture, FMCG, and so on. So it becomes difficult to even creating strategies on how to reach those segments that I mentioned. The other one is the DPI. I think we're going to talk about DPI until everyone embraces it. You cannot privatize you open API to a private entity. So they will continue to drive the cost of integration. It should be owned by the government, by different platforms. So I can talk about it over and over, but I can see they're asking us to wind up. Thank you.
Thank you so much. And yeah, unfortunately, we are out of time. I think we could all talk about this for a lot longer. This was supposed to be an introduction. Most of this group will be here all week. And the most important thing is that all of you speak to them in the breaks and at lunch and at dinner. So I hope everyone has a chance to talk to them. So I would like to very much thank this panel, and let's give them a round of applause for their discussion.